in a decent gold position. I was saying, what the hell am I going to do? Well, election night, somebody decided, I don't know who, it was up $35, and I said, well, I'll start selling and see if it handles it. I could not believe it. I sold my whole position up $35, which I was inclined to do anyway, but it was just a gift because all the reasons I had owned gold changed in 3 hours. The whole belief that monetary was the only answer and we were never going to change monetary regimes all evaporated in a couple of hours. Now, what was surprising was only there 5 hours. You had 5 hours to operate. In the old days, we would have had 2 or 3 days, but people are a lot quicker now than they used to be.
Just going back to the sizing issue, if I had to say the one thing that I think differentiates you from everyone else, the one thing that's become kind of clear to me in the macro world is you can even take and macro and you can split, you can take the beta and you can take the alpha and you can kind of break it down into the two components. And when I say beta, most macro traders are some type of intermediate trend followers. And so when you've got a high volatile period, it's a great time to have traders who can warehouse risk, to have women or men who can come in and can go 150 or 200 or 250% a particular instrument. I would call that beta. All you wanted to do in the 80s and the 90s when you had great trends was have beta. Then you get into a period like the last 2 years where everything kind of, or let's say after the first quarter of 15 where everything moves sideways, then the alpha becomes so critical. And what you've been able to do is, again, brilliantly, because I know you don't make the same size bets, is distinguish between environmentally when it's time to go big and not. And just, when it comes to your sizing, again, anything, how do you have that aha moment when you go, okay, it's time for 250%? And then B, when you're running those big positions, when you're running those outsized positions, how do you deal with that emotionally and physically?
Well, let's be clear. I'm not making 30% a year anymore since I retired, and I'm not running the size I used to, and I do feel like I left so much on the table election night. But I don't know. There have been a number of instances over my career where it was very clear to me that the world had changed. The world changed on 9/11. The world changed when the wall came down in Germany. The world changed the night Donald Trump was elected. And these set in place usually 2 to 4 year trends of concentric circles you can play. And I've always felt comfortable, again, I'm not the man I used to be, of jumping in big with a thesis, and if it's working, staying with it.
All right, the man you used to be, when you and George were teamed up, I remember you had 9 minus $1 billion days.
4, but thanks for reminding me.
4. Yeah. Billion here, billion there, who cares? What was that like? I can't even imagine what that was like.
It wasn't fun. It was gut-wrenching, and I'm not going to sit here and tell you, oh, I had great conviction, let's double down. I was doing you-know-what in my pants. But again, since the facts hadn't changed, my thesis hadn't changed, I stuck with it. There have been other periods where I put on a bet like that, and the thesis changed, I just took my medicine. Interestingly, none of those $4 billion days was one of those. But, I famously got trapped. I bought the NASDAQ beautifully in 99, sold it in early 2000, bought the exact top. I knew I was trapped there. I blew that out. That probably cost me 15% by the time I cleaned that mess up that I'd made on the floor. But no, it's a terrible emotional experience. It's also fun winning. I'm a bit of a junkie for adrenaline, so.
Do you think, I know George is still trading in his late 80s. Do you think he'll trade to your late 80s?
I hope so. My mother-in-law said I'm an idiot savant, and she's right. I don't know what else I would do. I don't have another skill set.
TV talk show host.
I'll let you do that. You're excellent.
Let's talk about Trump. So you just said the world has changed. Why don't we take it asset class by asset class? Let's start. Many of you may have noticed. Anybody know what the theme song Stan chose for us to walk out was? When Doves Cry. When Doves Cry. So that was his big attempt at giving one of these to our current Federal Reserve policy. You want to talk to us about interest rates and what you think Trump, the implications for that are?
Well, it's a fluid situation. I'm not a big fan of Donald Trump. Let me just put that out there. But I am a huge fan of Paul Ryan, and Paul Ryan and Mike Pence grew up in the house together, and they're like this. And because of his inexperience in a lot of matters, I think Trump is going to have to delegate in certain areas. And I think there's a very high probability that one of those areas will be in tax reform and regulation policy. I think he'll be very involved in infrastructure because, as he said, I build things. This is what I do, okay? But conveniently, Ryan and the Republicans were worried about Trump a year ago, so they've come up with a program. I don't know why it has not gotten more publicity, called A Better Way. It's similar to the Contract for America back in the 90s. And it is an in-place program to hit the ground running that calls for major cuts in individual taxes, more importantly, major cuts in corporate taxes, corporate tax reform, a VAT tax on imported goods that's not taxed on exported goods, non-deductibility of interest expense. We'll see how Mr. Builder goes for that one. All this is kind of a dream. It's all also 1 year complete write-off of any business investment. So it's all pushing us toward business investment, capital spending, and away from financial engineering. How much Trump will get let through? I'm pretty confident he's prepared to delegate a lot of this. My problem will be with the Senate. You can just see the special interest carving this stuff up when we get there. But I mean, if half of this stuff gets done, it's huge. The only economist I know that is good at predicting the economy, most of them write obscure papers and get Nobel Prizes. The IMF is 0 for 220 in predicting the last 220 economic inflection points. Is my former classmate Larry Lindsay. He predicted the 90 recession. He predicted the upturn in the 90s. He predicted the 2000 recession. He predicted the financial crisis. Putting all this together, he's using 6% nominal GDP in 2018. Because we've borrowed so much from the future with the monetary policy, I don't think we'll get to 6% nominal growth. But when things aren't being rigged, and I think we're moving away from that, 10 years tend to trade on top of nominal GDP. So the math is not complicated. If you don't think we get short-circuited because we've borrowed so much from the future through interest rates, it would call for a 6% 10-year in a year and a half. It's not too complicated. I've seen these kind of moves before. They're big trends. As you know, we got lucky with the euro at 135, 140. I think everybody hated the euro from 135, 140. But everybody overtraded their position. That's what you tend to do when something's going like this. And I think the 10-year is something, and again, you got to keep an open mind and see how things unfold. This is a very fluid situation, but this is not something you want to overtrade. This could be a massive, massive change in trend, sort of the mirror of when I started Duquesne in 1981.
So, favorite interest rate trade is going to be short in the U.S., going to be probably short 10s or 5s, or?
I don't really care. If she continues to fight it, 10s and 30s, but even she'll catch on in 6 months if this stuff unfolds the way I think it is. It really doesn't matter. Germany, it's unbelievable to me that Mario Draghi has been whining about Janet Yellen for a year, and he's sitting there on minus 40 basis points and debating whether to put 80 billion a month or 60 billion on top of that. Ridiculous. The European economy is doing fine. They don't have deflation. So I'm short a lot of that stuff. I'm short gilts. Probably looking 4 or 5% nominal GDP growth there. 130 or 140 or wherever they are. It doesn't make any sense to me, these yields.
So what I think is so interesting about the interest rate trade is you've actually got three things going on. You've got obviously a change in fiscal policy. You have, I guess, the end of a 3.5-decade bull market in interest rates, which just by itself, just on some normal mean reversion, would give you a huge move. But then you've got the kicker in, he's going to appoint a new Fed chairperson. And just, have you heard anything on that? Just curious as the kind of person you think he'll appoint and what impact that'll have on rates.
Well, I heard him say he's a low interest rate guy, but all the people I've heard and the philosophy within his crowd is very much that monetary policy has killed the forgotten man. It's made people like me and you richer. It's killed the guy in Kansas City who saved his whole life and he's getting zero on it. It's moved money away from the real economy to financial engineering. So just the names that are floating around all would suggest a more normal, neutral kind of monetary person running Spain. I mean, honestly, the only people that think like this are at Harvard, Princeton, and the Federal Reserve. If you go anywhere in the United States, they all ask me, what's the matter with you people? And what do you mean, you people? With these crazy interest rates, you Wall Street people. I said, well, don't count me in, but intuitively, the American public understands that there's just something wrong about borrowing money and having a hurdle rate of 0.
So the Fed chairperson, the difference between a new normal, to use your word, Fed chairperson Janet Yellen is worth how many basis points across the curve?
Well, if you use normal Taylor rule measures, we should be at 3% now. Okay. Obviously, if you get there violently, you won't get there. I mean, that's the tragedy of what she's done. She's had at least 2 years to sneak 4 or 5 in, including like 6 or 7 months of 300,000 payrolls. She's had so many opportunities, and she's blown it. The risk here is monetary policy doesn't do anything except drag demand forward from the future. It's that somewhere between here and normal, you get short-circuited because you start to pay back what they've been stealing from future demand the last 8 years.
All right, so let's say your interest rate forecast is right. I'm going to challenge you on it because my guess is, since the stock market's a long-duration asset too, and because our stock market and GDP is 130% and the wealth effect is well documented, the stock market probably won't tolerate that. How much can rates rise before you think it would trip a 10% correction in the S&P 500?
I don't know the answer to that question, but I would think 3% would certainly be a problem on 10 years.
Mm-hmm.
But the stock market to me is more about mix than direction right now. Mm-hmm. The companies that could make a lot, do very, very well in a zero growth environment were worth a lot more 13 days ago than they are now. The companies that are geared toward world growth may have the earnings to overcome that. So it's more of a mix change. But look, I mean, it's not rocket science. Rates will go up enough. This market has been fed risk parity, blah, blah, blah. That will all get short-circuited long before you get to 6% on a 10-year. So this decline in again and what's going on could be self-feeding, which leads me to the other way to play all this, which is obviously the dollar. It's not just a rate trade, it's a dollar play with Draghi fighting, kicking, and screaming. He will lose. He will get mugged by the data and the Germans eventually, but as long as he's fighting and Japan is sticking to this policy, and again, being open-minded, that Ryan Pence gets a big portion of this without the Senate nuking and all, it looks like a big trend trade.
So in FX, your favorite short is the yen or the euro?
I like them both.
Like equally weighted, you like them both. Euro could go to where?
82.
Oh, wow. Intriguing.
Well, you're a chart guy. This is kind of funny because when it broke 120, I said it counts to 82.
Yeah.
And they look, I said, yeah, but usually it goes sideways for a year and a half. And of course it went to 105 and I forgot that it still counted to 82 and it goes sideways. I said, how the hell could it ever get to 82? Threw that eggs in one basket thesis away about a year ago, and now I'm thinking, well, I could envision it getting to 82.
Yeah.
So dependent on different measures, it just didn't make any sense anymore. The Eurozone doesn't make any sense. I mean, Italy has not grown in 9 years. Nada. Zero. Spain and Germany are doing fine. It's a stupid idea. Okay, it's one of those things that was a great idea and it didn't work. So it's time to adjust. So I assume at some point within 5 or 10 years for sure the Eurozone will blow up because it doesn't work anymore. These countries are not united. Now you're going to say, well, they haven't had a war. All right, come on. Japan was a warlord country for its entire life. They haven't had a war since World War II. It's not because of the Eurozone. You know, they're not in like some Asian Pacific zone. It's because you had a change in culture in Japan, which I would argue very strongly. You've had a change in culture in Germany. And to say we got to do this because we haven't had a war, when people know now if you got a major war, you're talking nuclear. There's all sorts of reasons we haven't had a war in Europe. But to say it's because of this stupid Eurozone idea just makes me crazy.
I'm so glad you answered that question before I ask it. Another big macro question. Japan. Their debt to GDP, clearly it stands out as an outlier when you look at a scatter plot against any other countries. We're now surpassed the level where Greece went tips up. Any forecast, any thoughts of what the ultimate resolution of their sovereign debt problem is, which of course right now doesn't even exist in the market, at least as far as the markets care?
Well, the ultimate solution is they monetize, and
but timing.
You have to be open-minded.